Financial Factors and International Competitiveness, Professor Jan Bossack. Internal and External Balance, Issues. Artificial and Real. Open and Regulated Economic System. Reserves. Creditors and Debt Holders. Debt-to-Ma Structure, Servicing Costs and Capital Payments. Net International Investment Position. Financial Liquidity and Country Financial Risk. Exchange Rate. Trade and Financial Liberalization. Developments of international financial markets. Growing leverage financing. Growing international financial debt and risk exposure. New financial instruments and growing systemic risk. Information and Communications Technology, ICT, Revolution, Liberalization and Globalization of Financial Markets. International Competitiveness and Financial Factors. Real and Financial Factors in International Competitiveness. Money Functions and Market Efficiency. International Finance and Development. Market Competitive Exchanges and Cooperation. Growing international financial transactions. Increasing public and sovereign debt and foreign debt. Real and Financial Competitiveness. Growing importance of foreign debt. Risk exposure and financial rating. Foreign debt structure. Time structure of debt. Financial cost. Financial liquidity. Investment attractiveness. Monetary and fiscal measures and their importance for equilibrium and development. Mundell-Fleming model. Importance of fiscal and monetary factors. Retroactive adjustment. Structural adjustment. Proactive adjustment based on reforms and modernization investments and support for entrepreneurship, competition and innovation. Dynamic adjustment and innovation. Modification to Mundell-Fleming static model. Time value of money and international competitiveness. Financial cost, risk and liquidity. Financial leverage. Debt service costs. Foreign financial debt and risk. Public finance foreign debt and deterioration of access. Cost of financing in international financial markets for companies. Global financial speculation. Problem of financial ratings. Investment attractiveness. Financial costs in international competition. Interest rates and access to finance. Financial costs and price competition and competitiveness. Interest rates and currency exchange rate. Interest rates differentials and international financial flows. Interest rates and investment, consumption and turnover. Financial risk and its consequences. Taxes and financial leverage. Financial system and a risk. Banking sector stability. Capital adequacy ratio and banking sector efficiency and stability. Basel I, II and III. International Regulatory Framework for Banks Reforms. Capital Requirements Directives, CRD 3 and 4. Markets and Financial Instruments Directive, MiFID, and European Passport. European Union Rating Agency. Euro instability and European competitiveness. Financial crisis and its sources. American virus. Growing budget deficits and international finance. Certificates of debt securities, CDS, crisis. Shortage of financial liquidity and deflationary pressures. Monetary response. European bank policy. Stabilization fund and distortion of competition. Basel and EU reforms. Basel recommendations for banks and the capital adequacy ratio, CAR. Markets and Financial Instruments Directive, MiFID, reforms. European Union Rating Agency. The European Banking Authority, EBA. Recommendations for banks' capitalization upgrading. Capital Requirements Directives, CRD 3 and 4 and restrictions and premiums for risk officers at banks. G20 and the Organization for Economic Cooperation and Development stance on international finance stability. The International Monetary Fund, IMF, supports for international cooperation. G20 recommendations. Growing financial insecurity and reduced confidence. Growing public finance and consumer finance debt. Problem of savings and investments. Banking Union. Banking Union. Safety of banking sector. Capital adequacy ratio, CAR. Competition in banking sector. Stress test. Public support for banks. Competition in banking sector. Savings and investment banks. European Union energy and climate policy and European lost competitiveness and dynamics. European Union growing dependence on imported oil and gas. Increase in energy balance of renewable resources. Nuclear energy dilemma. Declining use of coal as energy source. Climate policy and its impact on energy cost and imports. Problems of energy security. European climate policy, instead of energy policy. EU climate policy and international competitiveness. How it happened, from Lisbon Strategy, LS, to climate policy reducing European development. Carbon oxygen emissions and tax penalties. Why penalties for different natural energy resources use. Difference in energy cost and international competitiveness. Energy import dependence and security. Shale gas and oil in the US and European uncompetitive mistaken policy. Balance of payments theories. Classic and neoclassic, gold and paper, market servo mechanism, gold system, subordination of internal equilibrium to external one. Keynes, reversing of internal and external balance importance. Dominance of domestic balance, abandoning the gold standard. Financial stability based on confidence to state monetary policies. Absorption and switching, W. Gordon, Fleming, Mundell. Monetary approach, demand supply for money, M. Friedman. Balance of payments in an open economy, long-term perspective. Balance of payments equilibrium. Formal, accounting balance. Autonomous transactions. Equalization transactions. Changes in comparative incomes. Changes in comparative prices. Changes in comparative exchange rates. Changes in comparative productivity in the Unlimited Liability Corporation, ULC. Changes in comparative efficiency. Changes in comparative economic progress. Sources of change. Balance of payments, reserves and net international investment position. Current account balance. Capital balance. Equalization transactions. Current account balance, trade, services, interest and dividends, transfers public and private. Capital balance, short and long-term capital flows, short-term, portfolio, foreign direct investment, FD. T plus S plus CERD plus T plus STC plus P plus foreign direct investment, FD, plus ET equals 0, reserves. Net international investment position, assets and liabilities. Economic balance and payment balance. Internal and external balance. Internal balance, savings and investment, budget balance, revenues and expenditures. Monetary balance, inflation-deflation. Changes in exchange rates. Changes in labor balance. Changes in financial liquidity and risk. Changes in incomes. Long, medium and short-term balances. Liberalization of foreign trade and foreign direct investment, FDI. From protectionism to liberalism. Information and Communications Technology, ICT, revolution in foreign direct investment, FDI, expansion. Competitive devaluation and exports. Reforms, savings and investments. Economic freedom and competition. From macroeconomics and balance to competition, entrepreneurship and innovation. Creditors, debtors and investors. Net exporters and net importers. Service exporters and importers. Interest and dividend flows. Technological exporters and importers. Donors of assistance and beneficiaries. Private transfers of savings. Creditors and debtors. Portfolio investors and importers. Foreign direct investment, FDI. Exporters and importers. Prices, exchange rates, interest rates and balance of payments. Prices and exchange rates. Interest rates and exchange rates. Savings ratios and investments. Incomes and exchange rates. Demand and supply, current account and capital account. Deficit and debt versus risk, liquidity and exchange rates. Changeability, currency risk. Dangers of budget deficit. Changing business cycles, incomes and employment and balance. Balance of payment equilibrium. Real versus artificial. Autonomic and equalization transactions, reserves and debt position. Factors of change, income and price changes. Nominal versus real exchange rates. Purchasing power parity, PPP, rates. Real effective exchange rates, REER. Internal and external equilibrium. The internal equilibrium requires the balance of supply and demand together with full employment and absence of inflation, or at stable low level. The external equilibrium means the maintenance of a zero balance of payments in terms of a certain exchange rate regime. Long-term balance of payments. Real effective exchange rates, RER. Monetary balance.